Realtor Organization, formerly called the McHenry County Real Estate Organization. We have about 1,000 members. Those are that's 1,000, and we take pretty much in all of McHenry County and some of the collar counties. And one of the things you'll learn in these next 3 sessions is how agents do their job, what agents do, and how they can help you navigate whether you're selling or whether you're buying your home. We also have 100 affiliates, a little over 100 affiliates that are working with us. So what's an affiliate? And we're going to go through some definitions here in a little bit. An affiliate would be somebody, a home inspector, an appraiser, a banker, a lender, an attorney, someone that is part of the process, because there are a lot of different processes when you are purchasing a home. So when I throw those numbers out, 1,000 and 100 for McHenry County, let's sort of compare that to some different things. So just to give you an idea, so we have 1,000 members in McHenry County. The state of Illinois right now on average has about 49,000 real estate agents in the entire state. About 25,000 of those are located in the Chicago area and basically in Chicago. Now that doesn't mean of the 49,000 that they're all practicing. So of the 49,000, you'll find some that are doing a lot of work and some that are doing minimal work. They're just licensed. So although that number seems very high, it's really not. So for example, California has about 200,000 real estate agents, and Florida has about 175,000 realtors. So you can sort of see a comparison in numbers. If you went nationwide, right now in the United States, there's about 1.3 million real estate agents, or realtors as we call them, that are in some sort of practicing or that are licensed agents. So you can see the numbers are all over the board there. One of the things you need to keep in mind that a real estate agent works for a company, but they're somewhat independent. One of the questions we get many times is, what houses can you show me? So if you are a licensed real estate agent in Illinois, you can practice theoretically anywhere in the state of Illinois. Now, we do have ethics requirements that we need to meet, and those ethics requirements state that we shouldn't go into an area that we are not familiar with. So for example, I could go down legally and I could help someone buy a house or sell a house in Southern Illinois or Central Illinois, but I'm not really familiar with that market. So I wouldn't be doing justice to either the seller or the buyer, and I wouldn't be doing my proper duty to them. But license-wise, you can do that. But in our local areas, sometimes we'll get questions from customers that'll say, well, can you show me that house? It has a sign from ABC Realtor on it, and you're from XYZ Realtor. Well, the answer to that is yes. It's that any realtor that's licensed and that's a dues-paying member of an association can show you any house that's listed in the multiple listing service. And so keep that in mind, that once you find an agent, you should probably stick with that agent. So let's talk a little bit about agents here and what we have going on. And we're going to get into some definitions here. This is important with the definitions because you'll hear all sorts of terms, and you should have, you're not going to know them all, but you should have some basic understanding. First off, and this one could be confusing, in Illinois, we call our real estate agents brokers. So you might hear the term agent, you might hear the term broker. Most other states call their agents just agents, and then the broker would be the person managing or running or owning the office. So many years ago in Illinois, we changed our name, we changed our agent's name to brokers. And so why did we do that? Well, a broker, if you look it up in the dictionary, is really someone that brings different parties together. So that's really our job as an agent. It's more than just me showing you a house to purchase or me setting your house up for you to sell. There's all different sorts of things that are involved in the process. There's the lending portion, the appraisal portion, the home inspection, the attorney review, all different types of issues that can come up, well inspections, septic inspections. And with that, as a broker, our job is to make sure that that all gets put together and that all is handled properly. So that's why we changed the name to broker in Illinois. But it can be confusing. So in Illinois, if you're someone running an office, owning an office, then you're called a managing broker. So like I said, a little confusing. You may hear refer to people as agents, you may refer as brokers, but either way, as long as they're licensed, they can help you. So you might go on a website and they'll probably specifically talk about real estate agents, but an agent and a broker in Illinois are pretty much the same jobs, the same definitions. So that's probably one of our biggest definitions right there. So I'll go through a few of them here for you. Let's talk about, these are two big ones, a buyer's agent and a seller's agent, or in Illinois, we could call them a buyer's broker and a seller's broker. But what is a buyer's agent? It's just that. It's someone that if you're looking to buy a house and you need an agent to help you, then I'm representing you as the buyer's agent. I'm going to help you as the buyer, help you go through the entire process. If I'm a seller's agent, it's just the opposite. I'm helping the seller. I'm helping them determine the value of their house. I'm helping them list their home, telling them what they need to do to prepare their home for selling, and all the different parts that are involved with that. So I can be a buyer's agent and I can be a seller's agent. Most agents that start out, newer brokers in Illinois, start out primarily as buyer's agents, and then a lot of them morph over into seller's agents, but there's nothing that says you can only be one or the other. Some agents like specifically working with one particular group, and others work with both. I work with both. I still enjoy going with buyers because I like looking at homes and seeing what people have done to their homes. So you'll find some agents that say, I don't prefer working with buyers. I do. I like working with both. And then here's one, a very confusing one for you. Dual agency. So what is dual agency? And I won't get too deep into this, but dual agency means I'm representing both sides of the equation here. So I'm representing the seller and the buyer. Well, how does that happen? And is that good or is that bad? Well, I have to be honest, before I got into the real estate business, I had sold a few homes in my life using an agent. And I remember the agent asking me when he was doing the paperwork saying, will you accept dual agency should it come up? And I was like, what's dual agency? And he explained it to me. He said, well, that means I would bring the buyer to the table and I'd be representing you. And I sort of gave him that look and thought to myself, I thought that's what I was hiring you for, was to bring a buyer. But to be represented properly, you want to have someone that's looking out for your best interest. So if I'm what they call a dual agent first, both sides of the parties have to agree. So the selling side has to agree that I can represent them, and the buyer side has to agree that I can represent them. Once we get by that point, then there's advantages and disadvantages. The advantage is that I'm running the entire deal, so I can make sure everything goes smoothly as possible. The disadvantage might be is that there are certain restrictions under ethics rules that say I can't get into the pricing or anything. So normally, if I'm just representing one side, I could say, yes, that's a good price, or no, that's not a good price, or they're asking too much, or yes, you need to up your offer. If I'm representing both sides, I have to leave the prices to them. I have to say, this is the offer that they're offering, and you have to decide whether you like that or not. I can't get involved in that. So it rarely happens, but you might hear that. Commission, that's something that you'll hear, especially from the seller side. That's how real estate brokers, agents, however we're going to call ourselves, are paid, because there are fees involved in this. The home inspection, I'm not going to talk specifically about each one of these, but the home inspector, I believe on our third session, we're going to have home inspector. On our second session, thank you. Second session, in a few days, we'll have a home inspector, and they'll go through that process with you. Very important part of the process. But just real quickly, and this is sort of almost for fun, let me go through some of these terms for you. Borrower, broker, buyer's agent, buyer's marketing, borrower, commission, eminent domain, exclusive listing, real estate agent, realtor, annual percentage rate, appreciation, assessed value, compounding interest, grace period, homeowner's insurance, jumbo loan, mortgage, pre-approval, principal, refinance, underwriting, VA loans, as is, backup offer, blind offer, comparables, contingency, due diligence, debt to income ratio, equity, Fair Credit Reporting Act, Fannie Mae, FICO score, Freddie Mac, lender, cash out refinance, buy down, bridge loan, blanket mortgage, default, delinquency, FHA loan, fixed rate mortgage, and that's just a few of them. And the fact is, this is the reason why you need a professional real estate broker agent to assist you, whether you're buying or selling, because how would you know what all of those mean? I mean, you wouldn't be expected to. If you don't deal with that every day, how would you know? So I think back to prior, as I told you, when I didn't know what a dual agent was. Now I know what it is, but at the time it sounded very confusing to me. So, and as adults, we all tend to shake our head and act like we know what's going on, because that's just the way we act. But honestly, to know all these terms and know how they might affect you in the selling of your house or the purchasing of your home, that's very important. And so that's why you should hire a professional agent. Sometimes we get the question, can I sell my house by myself? We call that a for sale by owner. And the answer is yes, you can. You surely can. Is it a good idea? I don't think so. Now, you might be sitting there going, well, of course he doesn't think so, because Tim's a practicing real estate agent and this is how he makes a living. And there's some truth to that. But the other side of it too is, first off, statistically, people that sell their houses by themselves tend to get less money than if they use an agent. And there's something else that's very important when you're talking about this. If someone's selling their home by themselves, we call it a FSBO, for sale by owner. Why are they doing that? They're most likely doing it because they're trying to save commission. So they're trying to save some of the money that they would have to pay out to a realtor to help sell their house. If someone's buying a for sale by owner, they already know that that money's being saved. And so they're most likely going to make their offer or place their value with the fact that that seller isn't paying any commission. So the seller's trying to save some money, and then the buyer's trying to save some money. The problem is that they both can't save the same money. Now, in a perfect world, maybe you'd split that and say, well, I'll give you half and I'll take half. But the world's not perfect, and I've never seen that happen. So can you do it? Yes. Are there books out there to do it? Absolutely. But there's so many different processes that come up. The contract that we use in this area is 13 pages. It covers both the seller and protects the seller, and it covers the buyer and protects the buyer. And unless you're educated and know specifically about these things, you would have a hard time responding to these. Imagine being a seller and explaining, you know, what a home inspection is and the 10-day period is, and the 5-day period for attorney review. If you didn't work with it every day, you really wouldn't know how to respond to that. How do you become a real estate agent in Illinois? Start out now. It's just changed recently. You have to be 18 years of age. You have to have a social security number and be a high school or GED graduate. You have to take a 75-hour course. That's true 75 hours. You can take some of it online. You can take some of it in classroom. A big place in our area, depending where you're watching from tonight, part of that would be McHenry County College has a very good course, and I believe Elgin Community College has a very good course, as does Lake County. So there are different places, or you can go online. You can go to the Illinois Realtor website, and they can help you also. Or you can call Heartland, and we can send you in the right direction. So there's a lot of training that's involved, and then you have to be licensed through the state. You have to take a state and national test. And then every 2 years, you have to go back for continuing education. And so you can learn what has changed within the industry. So those are just some of the things about Heartland and how we got here. So recently, about 3 weeks ago, I attended some business meetings in Normal, Illinois for Illinois Realtors. And the big term that we were using down there was everyone deserves the American dream. What's the American dream? Being able to own a home, being able to purchase a home, own a home, sell that home, or rent that home. That's the American dream. So that's a pretty bold statement there. And I find it very important. But we also have to remember, just because everyone deserves the American dream, not everyone qualifies for the American dream. And we're sort of talking today about how we, post-pandemic and how we're getting there. And this is very important to realize that how did we get we're going to talk about low inventory in a second. How did we get in that in the first place? Well, how did we get in that? Well, back in the late 90s, in the early 2000s, housing was just going crazy. It was buy, sell, and everyone wanted the American dream. And so everyone, the government, lenders, everyone said, how can we do this and allow people to purchase a home? And so they came up with all these different ideas on how you could finance your home and how we could help people that maybe didn't qualify under normal circumstances to purchase a home. And as great as an idea as it was, and as great as it helped people, it also hurt the market very much. And let's be honest, a big part of the market back then, which led to the Great Recession, had to do with greed. And it was greed on all our parts. It was greed on sellers. It was greed on buyers. It was greed on lenders. It was greed on appraisers. But at the time, we all thought it was great, because who doesn't want the value of their property to go up? We all want to see that happen. So the market peaked out, now that we are able to go back and look at it, as far as price wise, it peaked out at about 2006. As far back as 2004, a very few people started saying, hey, there's going to be what we call the housing bubble. So one of the things to keep in mind when you hear on the news that housing's going up, housing's going down, this is what's going to happen, is that for all the experts that there are in the United States and the world, and all the TV experts that analyze this, none of them have been completely right. Not a few of them have, but most of them weren't right. No one on TV was guessing that there was going to be a housing bubble. It was move forward, move forward, move forward. That's just the truth of it. Lenders didn't think that that was going to happen. We had people purchasing homes back during that time that would purchase a home with no money down and walk away with checks, large checks, $5,000, $10,000. And I don't think the system was actually set up that way to do that, but that was sort of the results, because people learned how to make it work to their advantage. And imagine an agent or a lender or someone saying, if you buy this house at $200,000 with no money down, in a year it will be worth $240,000, and you'll be able to refinance, and you'll have $40,000 equity, extra money in that house. Well, who wouldn't want to grab onto that offer? But something happened, and what happened was we had what they called subprime loans. And what a subprime loan is, there's nothing wrong with it. A subprime loan means is that there's something in your past that makes it not as easy for you to qualify for a loan or for an interest rate. And that's called the subprime mortgage business. And the subprime mortgage business, usually what they'll do is they'll work with you to try to get you into some sort of loan that will help you purchase that home so you can have the American dream. So things got a little loose back in that time period, and people started, we probably started giving away loans. When I say we, whoever that is, the lenders, and everyone started giving away loans that they probably should not have. And one of the problems is that if you're buying a house with no money down and you don't have anything into it, one of the issues would be that it's easier for you to walk away from the house. There was a time in society in the United States where if you had a foreclosure on your house, it was a stigma that if you foreclosed on your house. Not so much after the subprime crisis, after the housing crisis and the housing bubble. So that's something to keep in mind with that too. Something else changed during that time too. The banking industry changed. The day of the local banks sort of disappeared. So it's very difficult to find a locally owned bank anymore. Most banks, they'll still have a branch in your town, big town, small town, but usually they're owned by larger things. So it used to be that, think of the movie, It's a Wonderful Life. They explain it very well when they have a housing bubble back in the 40s. And Jimmy Stewart's explaining how it is that money's loaned and everything. And that sort of puts it in a real simple term. But, back in the 70s and 80s and even early 90s, when banks were owned locally, if you ran into problems, you could go down and talk to the banker, and maybe they could help you out something temporarily. You lost your job, you had some medical issues or something like that. Because the banker ran the bank, owned the bank, he lived in your neighborhood, his kids went to school with your children, and so it was best for everybody. After the banks became nationalized, not government nationalized, but just became nationalized in conglomerates, it became more difficult to do that. You could still go down and talk to your corner banker, but his hands or her hands were tied. It was, I'm sorry, I can't do anything about this. There's people above me that are in control of this. So when 2006 and then really when 2007 hit, what happened was that we had a housing bubble, and it sort of happened overnight, just like that. I mean, it slowly worked in, but boom, all of a sudden. So what is a housing bubble exactly? Well, what it really meant was that the worst thing was that all of a sudden house values dropped drastically. Imagine buying a home for $300,000 And overnight it's worth $210,000 or $190,000. Now, if you're not moving and you're not looking to go anywhere, that's still tough to swallow, but you can survive that because you're still making your payments and you hope that the value comes back up. But the problem was that housing bubble turned into the Great Recession. And the Great Recession, people lost their jobs, lost their positions. And that was very tough for everyone. So now imagine if you lost your job or you had to transfer, something happened. Now your $300,000 home is worth, let's just say $200,000, but you still owe $295,000 on it. So we had a new term come in. What was that term? Short sale. First thing about a short sale, it's not short. So that means I'm going to sell my home and then I have to go to my lender and I have to ask permission. Will you only take what I can get for it? Because I don't have any of that extra money. And so it took a long time and it really devastated our market because people were losing their jobs. They were having to go elsewhere. So that's one of the things that led to the situation that we got to. One of the bigger things that happened during that too overnight was that home building stopped. It just stopped dead. So for our area, imagine back in the day, you're driving down Randall Road going to work or Route 14 or Route 31. And this wasn't so far-fetched that you might come home in the evening and go, there's 3 houses there that weren't there this morning when I went to work. That doesn't mean they were complete houses. They weren't done in 3 houses in a day, but we saw the frames going up and things happening. So that was very, that was how fast things were building. So you had large companies that were building subdivisions and homes. And with that comes schools and infrastructure and all sorts of things that had to happen. And those companies either went out of business overnight or just quit building homes. And they've been slowly getting back, but we went a long time without any homes being built. As a matter of fact, if I can find my notes here, from 1960 to 1995 was the biggest home building boom in the United States, and then it just dropped off 10 years later. So right now, one of the biggest problems we have, and this isn't only for our area, this is in the United States. Right now, the National Association of Realtors believes that in the United States, we're between $5 and $6 million, 6 million homes, not dollars, 5 and 6 million homes short in the United States for people to live in. And a big part of that is because we had building stop. So what happened to get us to where we are now with the pandemic? So we started to get out of what was happening, and the economy, we got out of the Great Recession and the economy started picking up, and people started purchasing homes. And then 2 years ago, just about 2 years ago, almost to the date, this thing popped in, pandemic. I'd never even heard pandemic before that popped. I didn't know what that word was, it just popped in. So the experts, the so-called experts at the time, especially in real estate, all thought this was going to be devastating for us. We even had meetings here wondering at Heartland, are we going to lose agents? Are there going to be signs up and down the streets, people getting their homes foreclosed on? All sorts of these things were entering our minds because we thought no one was going to be buying, people were going to be losing their jobs again, people were going to have to be moving because no one really knew what was happening. And that actually happened for about the first 6 weeks after the pandemic started. And then this strange thing started happening. People started buying. People started buying homes, and people started lining up to buy homes and buying. So why is that? Why all of a sudden, when everyone thought that things were going to disappear, why did everything pick up? There's a few reasons. I've made some notes here. One is low interest rates. So the United States government decided that the economy was, we were going into a mini recession at the time. So they decided that one of the things they could do to help was to lower interest rates, which were very low before any of this started. So they lowered them again, and it got to be about as free money as you could get with the low interest rates. So that was one of the problems. One of the big issues was low inventory, as we just talked about a few seconds ago. So one of the low inventory problems is that 10 years ago, 15 years ago, the builders quit building. So they've never jumped back in to where we're seeing 3 houses a day going up. So that's one of the issues that popped in. One of the other things is that as building started is that during those 10 years, we lost a lot of tradespeople. So now we run into the problem of having tradespeople, plumbers, electricians, carpenters, finish carpenters, roofers, heavy equipment operators, anyone that has anything to do with the building of a home. There's a lower amount of those now. So trades really hurts it right there. So that brings it down. What else did we have? As people started to build and the building started to take off, we live in a very restrictive country, and we live in the not in my backyard country. So it is more difficult to build a home in the United States, not just Illinois, but in the United States, because there's lots of restrictions that are put on. Now, we have seen a lot of those lifted by local communities, and that is helping very much, but that's something. But here's probably one of the biggest reasons that we've had this particular issue with housing in the last 2 years. So I have to read this just because I'm old, so we have baby boomers, 1946 to 1964. I'm a boomer. So then we have Gen X born 1965 to 1980. Any Gen Xers in the room here? Okay. Millennials, 1981 to 1996. We have a couple millennials. Any Generation Zs? Generation Z is 97 to 2012. So let's just focus on the Gen X and the millennials. So when the housing bubble crashed in let's say 2007, if you were 10 years old in 2007, how old are you now? You're in your mid-20s. So what didn't happen? They quit building houses and jobs ended and people found different jobs and all sorts of things changed, but people kept getting married and people kept having children and raising families. And now what we're seeing is that those people that were 10 years old at that time, or 8 years old, or 14 years old, they are in the prime buying periods of their lives. They've gone to college, they've gone to trade schools, they have careers now, they're married, they have children, and they're at the prime age to buy homes. And it sort of all came together with everybody in the last 2 years. And that's why we saw all of a sudden 10 people lining up to buy a home. And inventory is low. So as I close out here, let's talk real quickly about low inventory, because I can say low inventory and I can put statistics up and everything, but that doesn't mean anything to you if you don't deal with this industry every day. So one of the terms we use is months of inventory. So in a perfect real estate world, we would have 6 months of inventory. Let's use, I'm in Crystal Lake, so let's use the town of Crystal Lake. 6 months of inventory would mean that if no houses got listed and everything just sat right now and people were still buying, that in 6 months, all the inventory would run out. So 6 months is considered perfect. If it's over than 6 months, it's considered a buyer's market. That means it's more advantaged buyers. If it's lower than 6 months, it becomes a seller's market. Now, this low inventory just did not happen in the last 2 years because of COVID. It really started back in 2007. Even though houses were being short saled and houses were being foreclosed, we have had low inventory since then. We always knew it, just not as low as it is. I don't know what the latest numbers were this morning, but probably in Crystal Lake, it's probably running a little bit under 1 month's inventory for available homes. That's just ludicrous. There's nothing out there to buy, and that's why you're seeing people standing in line to buy homes. Something else to keep in mind is that we're in an age now with millennials and Gen Xers that they'll buy homes differently than boomers will buy homes. So it's not uncommon for someone to buy a home now without seeing it. It doesn't happen. I shouldn't say it doesn't happen a lot, because it's happening more and more. Because I would never buy a home off of my phone, but there's people that will do it, and because they've been raised with this. So that's something to keep in mind. So the buyers are doing something different. So that's one of the things. The other thing is that the pandemic, what's something that happened with the pandemic? People started working from home. I think the latest statistics have shown that about 40% of all jobs can be done from a home setting. So the way we lived was changed just in the last 24 months. Home offices, people wanted bigger houses. All of a sudden we went from small yards to big yards. Used to be in our area that a swimming pool wasn't all that considered that great. But now pools are, try to order a pool today. You're on a waiting list to get a pool put in because we're staying at home more. And that may change again, but right now that's what we have people looking for. So that's sort of what's changed the market. And I didn't even mention Gen Zs. Gen Zs, you could theoretically have Gen Zs born in '97, so that are 25 years old now. So they're going to hit that market too. And they were really raised in an electronic age. And so that's sort of where we are today. So what does this all boil down to in navigating is that you need a licensed real estate agent to help you get through this. And you need to be prepared when you're ready to buy that home. Because if you haven't gone through the pre-approval process for your loan and you're not all set up to go, the chances of you getting that home are very low. And that's because you have multiple people looking for homes. How do you compete against someone that wants to outbid you on a home and pay more than the home's worth? We have forms now that allow you to say, I'll pay more than the appraisal price of the house. I don't know why people would do that, but they're desperate to get their homes. So when you're competing against that, if you're just sort of, I'll call it kicking the tires, you're just sort of looking, if you're not prepared, there's houses are selling in 1 day, 2 days. The housing time market has dropped drastically. So the best way to do that is to pay attention, is to start working with your agent now, even if you're not thinking of going until March, April, or May. Now's the time to start going out, finding that agent and working with them so you're all prepared, you have your approval process, you know the process. And part of what this series is about is so we can teach you how to do that and what the process is, and so you have some familiarity with it. So with that, I enjoyed talking to you tonight. I do believe in the American dream, and I hope we can help you find a home, whether it's your first home or your forever home. That's what we are here for. And the next of our series will be real estate broker Jen Long, and she's going to talk to you a little bit tonight. And then we have 2 more sessions coming up in the future where we'll have attorneys and we'll have lenders and we'll have home inspectors. What that will explain the entire process to you. I thank you for your time.
Thank you, Tim, for that in-depth presentation about the state of real estate in McHenry County in Northern Illinois. I'm Jen Long. I'm a licensed real estate agent in both Illinois and Wisconsin. And I can attest to you how crazy this market has been. Tim mentioned people buying homes sight unseen. I did 2 of those transactions last year where I literally just walked around with my camera and took videos, sent them to my clients because they either, were out of town or at work, and, you got to the appointment and you did what you had to do because there wasn't a lot of inventory. So it has been very quirky and crazy. And so some things that are important are, as Tim mentioned, is pricing homes appropriately for sellers. That helps buyers because we are going over asking price a lot of the time in this current market. There are some other contingencies that people are trying to do to be the one who wins the home. But I think it's very important with the process to price your home appropriately for today's market because there are so many steps. And so that's the fun of being the realtor in the transaction, is that we get to deal with all the fun stuff, all of the steps, all of the parts of the transaction. So say you are the lucky person who, if you're a buyer, you find a home you like, we write you a contract, your offer gets accepted. Happy day, it's so exciting. What we have to do is there's a whole team of people in the background who will now help you get this home. There's attorneys, they have to do their review. We have your lender who we work with to make sure your finances go through. There's the home inspectors, which are vital because knowing what's going on in your future home, whether or not you expect anybody to fix that for you, it's good to know what's happening in your home when you move into it. All these people are so critical to the process to make it run smoothly. And as Tim mentioned, as the real estate broker, we're kind of the go-between for all these people. So that's why we think our job is really important and why you should work with us. So that's what we'll be covering in the next 2 sessions. February 17th is the next one, and we'll feature a real estate agent, myself, discussing the process in greater detail. We'll have a lender talking about different types of financing and just their part of the process, a very important part of the process. We'll have a home inspector come talk to you about why their job is so important, and why you need a licensed home inspector. Instead of just your contractor friend or your uncle who, maybe knows a little bit about electricity or something like that. Having a licensed home inspector really can give you a laundry list of everything that, is going on in the house, tell you what really needs to be taken care of, what can wait, what your 20-year plan is. They're awesome. So they will be there to talk to us on the 17th as well. Even if the inspection comes back with very little concern, just knowing what's happening with your house is super important. One thing that we won't be covering, but I did want to talk to you a little bit about today, is home warranties. We have a lot of amazing affiliates in Heartland who can help with that as well. As a buyer's representative, I often and I should always talk to my clients about home warranties. Sometimes the sellers will cover them, but as a buyer, you can buy them yourself. Basically, what it entails, it takes some of the pressure off. If something happens in your house within the first year, the home warranty will cover like major operating systems, your heating, electric, air conditioning, plumbing, even some of your appliances. And for a minimal fee, you can have that home warranty, and it's just a service call, and they will come and fix everything for you. And it just takes, like I said, a lot of the pressure off of being a first-time home buyer, or just the first year in your home, which can be overwhelming in general. Then we will also have a title insurance person come speak to you, because another thing that you might not think about is that when you buy a home and you assume you own your home, well, the title is your proof of ownership. Title insurance is very important, because if your seller had a lien on the property, or there was something fraudulent, technically you might not own that home, or you might be needing to owe some money. So title insurance is really important in order to avoid any kind of hoopla with that. So we will have somebody come and speak about that as well on the 17th. The next part of the series on March 3rd, we'll talk more about the seller side of the transaction. And I did want to point out, whether we're talking about the buyer side or the seller side, it's important for both buyers and sellers to listen, because you want to know what's going on the other side of your transaction. So as a seller, you're welcome to come listen to the buyer side on the 17th, just so that you know the process your buyers are going through, and that you can work with them when they're trying to schedule home inspections or appraisals or things like that. And as far as the seller side on March 3rd, it's important for buyers to understand, what your sellers have to go through, and, what it takes as far as staging and showings, and, their interactions with their attorneys. So we will have a realtor that day discussing selling your property, and we will have some attorneys talking about the entire process from start to finish. They'll also touch on things like short sales and foreclosures, as we're not seeing a ton of them coming up, but it is something for both buyers and sellers to think about, depending on what position you're in when selling your home, or if you're a buyer and you're looking into different types of transactions, what that will entail for you. So I'd like to thank Heartland REALTOR Organization for putting this presentation on, and for helping provide some clarity into the entire process that we will continue to cover in the next two sections. Buying a home, owning a home is the American dream, and we do want you to get there. It's probably the most expensive thing you'll ever do in your life, probably one of the most scary, but it's also one of the most exciting. So since Tim just gave you a whole bunch of information, I figure I might as well just throw a couple more facts and figures at you. Did you know that the national rate of home ownership in the US nationally is 66%? That's 2/3 of Americans own their own home. And when you look at the 4 quadrants of the US, the Midwest has the highest home ownership rate at about 70%. And McHenry County, almost 80%. So owning a home is very important to not just people in our area, but Americans in general. That's why we call it the American dream. But one thing, the median value of a home in McHenry County right now, as far as 2021 went, was about $225,000. But the figures we just pulled from the end of 2021 showed that in McHenry County, it was about $275,000. So home prices, home values have increased, and that's why you have seen a lot of buyers go over asking and sellers walking away with some pocket change. But that's the cost of the American dream. One other thing is that rent prices have been going up. So the average rent price right about now is about $1,400. And obviously that changes depending on, how many beds, how many baths, your location, that type of thing. But in McHenry County, we're thinking about $1,400. So what's interesting about that, and what we'll get into in the next couple sessions, is how you can take that $1,400 that you're using to rent your home and put it towards buying a home, because it is possible, and you'll hear from our lenders and everybody else coming up, how you can take that $1,400 and turn that into a mortgage payment. So, get your taxes done, save your tax return, because that can really get you there and get you to your American dream. So anyway, that's all we have for tonight. Thank you so much for joining us. And I hope to see you on February 17th for our next session. Otherwise, we'll see you on March 3rd for our final one. Thank you so much.